I want to show you a way that you can take your one-to-one trade and without moving your stop loss or your profit target, turn that into a 2-to-1 trade. Now you could call it a secret, you could call it a trick, but there's a little tweak that we can do to the way we enter the market that can get your 1-to-1 to a 2-to-1. So let me show you how to do that. So let's get rid of what's on the chart. First of all, I'm going to introduce you to my Fibonacci retracement tool. So with the Fibonacci retracement tool, we've got a couple of different levels on here. Now, if I open up my settings, we've got the 38.2 and the 61.8. These levels are what I consider my Fibonacci window. And in here, it's the green area. So we've got our Fibonacci at the top and at the bottom. And this green section is my Fibonacci window. What we're going to be doing is looking for a retracement into the top part of this window to skew our entry. So if I look at a long example, so we've got a long trade in here. So let's get in a little bit closer. We've got our long trade. So with our long trade, we've got our entry right above the high of this white candle. Our stop loss goes just below the low of that candle, and our 1-to-1 would be somewhere in here. Now, 1-to-1 on this is ideal because it is close to where this high is. So having a target at the recent areas of support and resistance, they make for good trades. Now, that gives me a 1-to-1. But if I want to get more than that, if I want to get 2-to-1, I have to do something with the entry. I've got to skew that a little bit. And the way we do that is by getting my Fibonacci tool and placing my Fibonacci at the high where the entry is going to be and the low where the stop loss is going to be. So let's do that here. We'll go from the high to the low, and this is going to give me my entry and my stop loss. Now let's zoom in a little bit more. We've got a Fibonacci window. So what I'm going to be doing is entering at a slightly different place. Let's put on my trade tool. So we're going to get into a long position here. We're going to have my stop loss at the bottom and my 1-to-1 is up here. Now, with this retracement tool, I'm simply looking for a retracement back to the top of that Fibonacci window. And that is where I'm going to be entering my trade. So by doing that, I've got my stop loss in the same place. I've got my target in the same place. However, I'm going to take my entry and move it to the top part of that Fibonacci window. Now, what I'll be doing is looking for the market to pull back and get to the top part of that Fibonacci window, and I will be entering a limit order. Now I could do this manually. Of course, I'd be looking to get in when we have that pullback. So with that pullback, let me just get rid of the Fibonacci window now. So with that pullback, I'd be looking to get into a trade a little bit lower. My stop loss is going to be in the same place. My profit target is going to be in the same place. But if I look at this, we now have a reward to risk ratio of 2.2-to-1. So we've got better than 2-to-1. And all we're doing is modifying the entry. We're looking for the price to pull back a little bit. So if I zoom out and I take my pen tool here, we have our entry area, we've got our stop loss, we've got our profit target, we have a 1-to-1 with this. So the market has come up, we've got our entry. What we're looking for is the price to pull back a little bit more into that top part of that Fibonacci window, which would be right in here. And from there, we're looking to take that trade. So the stop loss now is this section here, and the profit target is this section here. So we have a 1-to-2. So our reward to risk ratio becomes 2-to-1 simply because we're looking for that retrace. Now, if we take a look at this on the other side, we look at this for a short trade. We've got a nice short trade set up right in here. So let's zoom in on this one a little bit. Be looking at the short right in this area. So this gray candle right in the middle of the chart, this gives us a nice entry to go short. We've got our nice short entry. This is also a bearish engulfing candle. We've got all kinds of reasons to want to go short on this. So what we're looking here is for an entry underneath the low of this signal candle, and the stop loss could go either above the high of that candle or above that dot, and would be looking for a 1-to-1. But I want to do more than that. I want to get a 2-to-1 out of this. So again, I'm going to take my Fibonacci tool. I'm going to place it where my entry would be, drag it to where my stop loss would be, and now I'm going to be using this Fibonacci window as my entry. So because it's a short trade, I'm looking for the price to pull back, get to the bottom of that Fibonacci window, and that becomes where I enter the trade. So if I get my trade tool out, we'll be looking at entering a short trade at this area. We've got our stop loss. We have got our profit target. We're looking at a 1-to-1. But now, because we're looking for that retrace, I'm going to modify my entry. I'm going to pull that up to the bottom part of that Fibonacci retracement window. And again, we get a 2.2-to-1 target. So simply by waiting a little bit longer, having the market retrace a little bit against us, getting into the trade as it pulls back 1/3 of that distance between the original entry and stop loss, we get into a short trade here. This could be a sell limit order. We are going to keep our stop loss and our profit target in the same places, but because we've modified the entry, we are now going to double the reward on this trade. And there's not a big change to this trade. We're simply waiting for a small retracement that is going to get us into the trade at a little bit better price. Now, this does not come without its risks. This does not come without its drawbacks. This isn't going to work every time. One of the drawbacks of doing this is you're not always going to get into a trade. You're not always going to be able to enter a trade. You're going to have the market pull up against you, give you your signal. You've got your signal to go short. Now you're going to wait for that pullback into that bottom part of the Fibonacci window, but that just never happens. You get that short signal and the market just continues to move down. You don't get that pullback far enough to tag the bottom of that window, so you don't get entered into this trade. Now that is always a risk. Now the other risk for this is you do get the pullback into the window. So the market again moves up, comes back down. Because you've got your entry generally placed below the low of that signal candle, and you get the pullback that does tag the bottom of your Fibonacci window, there is a chance that the price just continues to move up and take out your stop loss. So there is a risk when you are doing it this way. Now, generally speaking, the reward does outweigh the risk. If going for 1-to-1 target is something that you really feel more comfortable than going for a 2-to-1 or any kind of extended target, this is going to increase the profit per trade, reduce the loss per trade. So at this point, now because you are going for a 2-to-1 trade, you are going to be able to lose twice as often as you win to maintain break even. So if you still have a 50% win rate when you do win, you are going to be making money using this technique. Now again, this could be called a secret, this could be called a trick, but it's a standard method that a lot of traders do implement, and as a result, they get bigger wins with smaller losses, and at the end of the day, that really does improve the bottom line. If you found this video useful, please give it a like, and if you haven't subscribed to my YouTube channel, please do that as well. If I don't see you in the Ultra Blue Forex members area, I will see you in the next video.